For today's Business Matters, President Trump announced new tariff measures this morning. He doubled his planned 25% tariff on all steel and aluminum products coming from Canada, so bringing the total to 50% in total. In a Truth Social post, Trump said he instructed his Commerce Secretary to add the additional 25% tariff. The new tariffs will go into effect tomorrow morning. And Trump said the new measures is in response to the province of Ontario placing a 25% tariff on electricity coming into the U.S. The president added that he would soon declare a national emergency on electricity in the threatened areas. Trump also called on Canada to immediately drop their 250 to 390% tariffs on U.S. dairy products, calling it outrageous. He threatened tariffs on cars coming into the U.S. on April 2nd if Canada doesn't drop its other, quote, egregious long-time tariffs. He said the move could permanently shut down Canada's automobile manufacturing business. And mark your calendars, the Obamacare enrollment period is being updated. The Centers for Medicare and Medicaid Services says the Trump administration plans to close enrollment 1 month earlier than the current deadline. Will now run from November 1st to December 15th. The agency said the move is aimed at addressing what it called improper enrollments. It said that this had increased taxpayer spending on the program. The updates also include tightening eligibility and requiring additional verification. These health plans were introduced under the Affordable Care Act and are subsidized based on income. Meanwhile, Health and Human Services Secretary Robert F. Kennedy Jr. is directing the FDA to eliminate a food safety loophole. The rule, called Generally Recognized as Safe, or GRAS, allows manufacturers to add certain food additives without approval if they meet specific criteria that experts have deemed safe for consumption. GRAS started in the late 1990s when the agency couldn't keep up with the flood of requests to approve new additives. It was intended to be applied narrowly to common ingredients, for example, sugar, vinegar, and baking soda, but critics say it's easy for manufacturers to add ingredients to products without any heads up to regulators. Kennedy says eliminating this loophole will get the nation's food supply back on track. Girl Scout cookie season is here. This year's sales could be hurt, though, by a new proposed class action lawsuit. It alleges the popular cookies have heavy metals and pesticides present in them. A study found the Girl Scout cookies contained at least 4 out of 5 heavy metals present. It also found pesticides used in some weed killers, with the highest levels in Thin Mints. The Girl Scouts addressed the study last month, saying heavy metals occur naturally in soil and the pesticide is found nearly everywhere in the food chain. It added that its bakers are committed to complying with all food safety standards. Next time you take the skies on Korean Air, check out its new look. The airline has launched new branding. Its planes will now sport the word Korean instead of Korean Air. The front is larger, modernized, and in dark blue. This comes after South Korea's largest airline completed a $1.3 billion acquisition. It now owns 2/3 of rival Asiana Airlines. This makes it one of Asia's biggest carriers. Asiana will run as a subsidiary until 2027. That's when it will negotiate, or rather integrate, under the Korean Air name and corporate identity. A $481 million real estate loan is the basis of a new lawsuit. Wells Fargo is suing JP Morgan Chase for going forward with the loan, which it claimed JP Morgan knew was based on a fraudulently inflated metric. The loan was to a private Manhattan real estate development firm, the Chedrit Group, to buy dozens of multifamily properties in several states. The borrower defaulted in 2022 and still owes more than $285 million. Wells Fargo served as the trustee for investors in the loan and wants to recover their losses. No immediate comment from JP Morgan or the Chedrit Group. The Chinese Communist Party is the target of a new bill passed by the House yesterday. It aims to cut reliance on Chinese-made batteries while also taking on human rights abuses. Congressman Carlos Jimenez introduced the bill.
As it stands, Communist China produces approximately 80% of the world's batteries and roughly 70% of the world's lithium-ion batteries. This dependence puts U.S. supply chains at risk and threatens our national security. Our government should not be spending tax dollars to procure batteries from companies that profit from slave labor or provide another avenue for the CCP to expand their surveillance apparatus here in the United States.
Now, the bill is titled Decoupling from Foreign Adversarial Battery Dependence Act. It restricts the Department of Homeland Security from purchasing batteries linked to Chinese Communist Party-controlled companies. The bill passed on the House on a bipartisan basis. The measure targets companies like CATL, BYD, and others accused of human rights abuses and security risks. Lawmakers described it as a crucial step in reducing U.S. reliance on China. They say it will help protect national security. The bill now goes to the Senate, where it's expected to gain bipartisan support. And it's the same for forecasts and estimates. AT&T's first quarter adjusted profit forecast is in line with analyst estimates. This signals a steady demand for AT&T's discounted premium plans, which combine 5G mobile with high-speed fiber data. The telecommunications giant has been investing in high-speed fiber internet offerings. The company is trying to drive faster subscriber and revenue growth as the number of potential new wireless customers in the U.S. shrinks. AT&T also planning to sell its entire 70% stake in DirecTV by the middle of the year. The company has seen declining distribution in the satellite TV industry. A prescription to invest in the U.S. That's how some companies are responding to tariff threats. For example, drug maker Merck has opened a $1 billion facility at its North Carolina site. It's the latest drug maker to boost U.S. manufacturing, actually. The pressure has been on under President Trump to move medicine production to the U.S. He has threatened to impose 25% tariffs on pharmaceutical imports. Merck's CFO said the company's manufacturing footprint is slightly heavier outside the U.S. The company expects to invest $8 billion in the U.S. by 2028. A battle over energy lawsuits. The U.S. Supreme Court has turned away a lawsuit brought by Republican attorneys general. It's an effort against Democrat state lawsuits filed to punish major energy companies. The 5 defendant states say oil companies have been misleading the public about the role that fossil fuels play in the environment. Those states argue the companies have known for years now about the dangers of greenhouse gas emissions and have deceived the public about them. 19 Republican attorneys general say the Democratic states are trying to impose laws beyond their borders and dictate a nationwide energy policy that will force up energy costs across the country. As President Trump is about to speak at a business roundtable very soon, we're bringing in now Joseph Trevisani, senior analyst at FX Street, to talk about recent stock market jitters. Joseph, good afternoon. Good to see you. So can you talk to us about the factor that's fueling the turmoil in the stock market?
Oh, hi, Don. Nice to see you. Well, it's pretty much an administrative, from the administration on their attempt to change the tariff structure between the United States and some of its major trading partners, that is Canada and Mexico. It is a, how shall we say, as Mr. Trump likes to say, President Trump, a negotiating tactic, but it is aimed at several things, and it has the market, at least the equity market, quite upset.
How deep would you say the fears are?
It's a very good question. One of the things I compare the equity response to is to the response in the bond market, in the credit markets. And despite the 450-point drop in the Dow today, the Treasury rates went up across the board anywhere north of 3 months. So it does not look to me at the moment that the credit markets, the Treasury markets, interest rates are responding in the same fashion, if you will, the same panicked fashion that the equities are.
So the White House, in a press briefing, said that the U.S. in a period of economic transition. What does that really mean, Joseph?
That's a good question. President Trump, said that, and the question is, what is he referring to? Is he referring to, as the markets seem to assume at some point, a transition to a recession, I don't think that's at all the case. I think the transition that he is referring to, and this is my supposition, of course, is the transition to a different tariff regime between Canada, Mexico, and the United States. Mr. Trump has been critical of NAFTA many times, and there are imbalances in the tariff structure between these countries. I think that was the reference for transition.
So looking at the data holistically, do you feel the economy, the U.S. economy, is slowing down?
The economy has slowed somewhat, but it hasn't slowed in any indication or any of the leading indicators that you normally would use to predict or anticipate a recession. The ISM manufacturing, which has long been considered a leading indicator, has now been above 50 for the first time in 2 years for 2 consecutive months. That does not appear to be headed towards a recession. Retail spending has not really changed very much. The last 3 months worth of non-farm payroll numbers are actually stronger than the 3-month period a year ago. So again, you're looking at fears in the stock market for what could be and positioning for that, but there isn't any at the moment backing from statistics.
But what if you take into consideration tariffs? Do you think that's a factor? Do you think tariffs will slow the economy down, potentially tipping it into recessionary territory?
Absolutely, it could be. And that is one of the reasons behind the stock market fall. But there's a big if here. The big if is that the tariffs remain in place, and both Mexico and Canada are obdurate about changing their tariff structure. If you end up with something like that, then of course the horror that everyone has in the background is the Smoot-Hawley Act from the early 1930s. But I don't think that's the case. I don't think that you're going to end up in a prolonged trade war here. And the reason is relatively simple. Both Mexico and Canada export a great deal more to the United States than they take in. Their economies stand to lose more than the U.S. in a prolonged trade dispute.
But do you think the biggest factor is that the president himself didn't rule out a recession when asked about it? What's your reaction to that?
My reaction to that is that President Trump is negotiating, as he likes to say. The take I get from that is that he is telling his negotiating partners, Canada and Mexico, that he is willing for the U.S. to endure a recession to change the parameters of the trade structure. Is that accurate? Again, this is my supposition, but that is how I take that statement.
So do you agree with the administration in what it's saying, that what it's doing will deliver long-term benefits, but with short-term pain? Do you agree with that?
I do in general, although not probably as adamantly as the administration does. The administration says. I think it will have an effect. I think certainly if you just take an example, dairy products in the United States, which are highly tariffed going into Canada, will it make a difference? Yes, it should. How much it will bring manufacturing and high-level manufacturing jobs back to the United States is another question. And it's one which we haven't really seen. It is undoubtedly true that in the past 30 years since the signing of NAFTA, manufacturing and manufacturing jobs have fled the United States. That doesn't mean that a change in the tariff structure will bring them all back.
So from what I'm hearing, I think you're saying that there is, in fact, going to be some pain. Correct me if I'm wrong on that. Do you think, long-term wise, do you think it's worth the pain?
I do. There doesn't seem to me to be any logic or any reason except that it benefits particular industries. Again, I'll use the example of Canada and the dairy tariffs. It doesn't really benefit anyone except that particular industry in Canada. In fact, it's a detriment. It's a charge against the Canadian consumer. So if you end up with freer trade, and I know many commentators will say they support free trade and what Trump is doing is anti-free trade, but in fact, you do not have free trade between the United States and Canada, nor between the United States and Mexico. There are tariff structures on both sides.
Well, all right, Joseph, that's all the time we have for today. Thank you very much once again.
My pleasure. Always glad to see you.
Next, a huge shift for Southwest Airlines. Their traditional 2 free checked bags offer is coming to an end. Their trademarked "Bags Fly Free" slogan has been an advertising staple that started about 60 years ago. NTD Shar Marshall has more.
Checked bags have been free when flying with Southwest Airlines for many years. But many loyal customers have taken to social media to express their frustrations about the end of a tradition. Southwest said Tuesday that it will begin charging customers a fee to check bags, abandoning a decades-long practice that executives had described last fall as key to differentiating the budget carrier from its rivals. Southwest has built years of advertising campaigns around its policy of letting passengers check up to 2 bags for free. The airline has not yet announced what the fee schedule will be, but said the new policy would start with May 28 bookings. To get free checked bags at Southwest, customers will now have to buy a business class ticket, be on the upper tiers of its Rapid Rewards loyalty program, or hold the airliner's credit card. Southwest isn't the only airline that's been running into problems. Delta and American, along with Southwest, alerted the public this week that their first quarter results will disappoint due to weakening consumer demand. Other reasons the big 3 airlines are having issues: reductions in government travel, pullbacks in corporate spending, and recent plane crashes. Southwest announced last month that it was eliminating 1,750 jobs, or 15% of its corporate workforce, in the first major layoffs in the company's 58-year history. As recently as Southwest's Investor Day in late September, airline executives described the "Bags Fly Free" advertising slogan as the most important feature in setting Southwest apart from rivals. All other leading U.S. airlines charge for checked luggage, and Wall Street has long argued that Southwest was leaving money behind. Southwest's stock was up more than 8% in late afternoon trading Tuesday. Sean Marshall, NTD News.
Meanwhile, Delta Airlines has slashed its earnings forecast for the first quarter. The carrier, in a filing yesterday, said it expects lower demand for domestic travel and customers' growing worries about the economy. Delta now expects its quarterly revenue to rise by between 3 to 4% compared to a year ago. That's down from its earlier estimate of 7 to 9%. The company's stock tumbled roughly 13% in after-hours trading on Monday. It came on the worst day for Wall Street so far this year, and after President Trump refused to rule out a recession in an interview with Fox News on Sunday. Former First Lady Michelle Obama is jumping back into the podcast world. According to her production company, the podcast will be called IMO, which is short for "In My Opinion." She's going to be the host of the podcast with her older brother, basketball executive Craig Robinson. Obama says they are launching the podcast to allow people to have, quote, thoughtful conversations about life. Some of the guests expected on the podcast will include director Tyler Perry and actors Seth Rogen and Issa Rae. The first 2 episodes will be released on Wednesday. Michelle Obama first released a podcast in 2020 called the Michelle Obama Podcast. Lego reported strong sales growth for 2024. More shoppers snapped up the company's colorful plastic brick construction sets. The toy maker said it was taking market share from rivals. Here's more.
Lego reported strong sales growth last year as more shoppers snapped up its colourful plastic brick construction sets. The toy maker said it's also taking market share from rivals. Lego has broadened its product range to reach new customers. It said on Tuesday that the Lego Botanicals sets, including flower bouquets and plants made of bricks, had become popular gifts. Lego's overall revenue for 2024 grew 13% to $10.82 billion, up from 2% growth the year before. Known for its long-running Star Wars and Harry Potter franchises, Lego has also created offline versions of online worlds. It launched sets inspired by video games Animal Crossing and Fortnite last year. Lego increased its range of sets to 840, 46% of which were new. Sales from Lego's own stores and website grew 12%, even as the broader toy market declined 1%. Lego's biggest manufacturing site is in Mexico, but the company's CEO shrugged off the impact of US President Donald Trump's tariffs on the country. He said they won't panic over it and will think long term. The Danish family-owned company is building new factories in the US state of Virginia, as well as in Vietnam.
And a new study shows employee burnout is hurting American businesses. Researchers at the CUNY Graduate School of Public Health and Health Policy in Manhattan found burnout can cost employers up to $5 million a year in lost productivity. It found burnout cost employers about $4,000 for non-managerial employees, about $10,000 for managers, and more than $20,000 for executives. And some signs of burnout include a drop in performance, missed deadlines, for example, and more mistakes in an employee's work. Researchers say that employers may want to focus more on employee health. Two airlines say fear of flying is pushing ticket sales down in the wake of multiple crashes. Delta CEO says two crashes are likely at least partly behind the travel pullback airlines are seeing this year. He pointed to a non-fatal crash in which a Delta flight flipped upside down upon landing in Toronto last month. He also pointed to the fatal collision of an American Airlines flight with a military helicopter over D.C. Meanwhile, the CEO of American Airlines says his airline's crash was a major factor in reduced revenue forecasts for the quarter. He said his airline's focus now is solely to take care of the families of the victims. A leadership shakeup at Nissan. The Japanese automaker announced its CEO is stepping down and a new one will be taking his place. Chief Planning Officer Ivan Espinosa will take over the top spot on April 1st. He's a Nissan veteran of 2 decades. He'll be taking over for Makoto Uchida, who's been CEO since 2019. Other senior leaders are also stepping down. The shakeup comes less than a month after Nissan and Honda ended their talks to merge, and Nissan reported dismal earnings. Avatar director James Cameron says the upcoming Avatar Fire and Ash will be longer than his previous Avatar movies, including 2022's Avatar: The Way of Water. Here's more.
We knew from our experience with Titanic and with the first Avatar that we really needed to wait and see how it played out.
James Cameron makes popular movies and long movies, and his next film, Avatar: Fire and Ash, due out in December, could be his longest yet. Cameron told the UK film outlet Empire it'll be longer than 2022's Avatar: The Way of Water, which he says was moving like a bullet train and didn't spend enough time on characters. The Way of Water ran 3 hours and 12 minutes, just shy of Cameron's longest, 3 hours and 14 minutes for Titanic.
And U.S. stocks closed lower today, but reduced the scale of their losses earlier in the session. And this is coming as a threat of fresh U.S. tariffs, along with the hopes of a possible peace deal between Ukraine and Russia fueled volatility. So on the positive side, Ontario's premier said he had agreed to suspend the Canadian province's 25% surcharge on exports of electricity to the U.S., including Michigan, New York, and Minnesota. Trump subsequently said he was now looking at reducing tariffs on Canada. And that's just a quick market update. And that's it for today's Business Matters.